The latest proposal to fix the housing market is a financial trap so long it could outlive you. And the real reason it's being pushed has nothing to do with helping you buy a home. Last week, a new idea for a 50-year home loan was quietly suggested to the public. Most people instantly recognized this as a terrible plan, and they were right. A mortgage that stretches for half a century will almost double the total interest you pay. It sabotages your ability to build equity, freezes the housing market, and adds dangerous new risks to our entire financial structure. Oh, and it will also make properties even more expensive. The typical first-time buyer is now around 40. Signing up for 50 years of payments means, statistically, many would still owe money more than a decade after they've passed away. We don't even need to guess if this works. Other nations have tried it, and the outcome was catastrophic. You might already see these glaring issues. But the dangers of a 50-year mortgage go far deeper, which leads to two crucial questions. If this is such a threat to our economy, how did we ever decide that 30 years was the perfect length? And the more pressing question, if it's so clearly a bad idea, who gets rich by making it a reality? A recent study shows that climbing interest rates have made owning a home impossible for many, requiring an extra $18,000 in income this year just to afford what was possible last year. To supposedly solve this, a 50-year mortgage was proposed. The sales pitch is lower monthly costs, but a mountain of extra interest. So let's start with the most obvious problem. These ultra-long loans won't make housing more affordable. They will likely do the exact opposite. In an ideal scenario, stretching your debt over an extra 2 decades should reduce your monthly bill. But even with generous math, the savings are shockingly small. Imagine a $320,000 loan at a 6% rate on a $400,000 house. Your payment on a 30-year loan would be about $1,920. On a 50-year plan, that drops to roughly $1,690, saving you around $230 each month. That's not much for committing to an extra 20 years of debt and nearly doubling your lifetime interest. Most analysts see this simple math and dismiss the concept entirely. But to be fair, some might argue that if you diligently invested that monthly $230 into the stock market, your gains could outpace your loan's interest, putting you ahead financially. In theory, this could help balance wealth for lower-income families and make it easier to enter the market. That $230 invested monthly for 50 years could grow to millions, far exceeding the extra interest paid. However, this requires absolute perfection. And I know what you're thinking right now. No one taking a 50-year loan will have that kind of ironclad financial discipline. The only reason to even consider this argument is that if these products hit the market, this is exactly how they'll be sold. You're not shackling your family to debt. You're leveraging time. Optimistically, people will use the savings to cover other rising costs. Realistically, this will just inflate home prices by boosting demand, just like it has every other time we've tried this trick. Longer car loans made vehicles more expensive. Easy student debt let tuition soar. Even everyday items got pricier with the help of creative consumer credit. Japan introduced 50-year mortgages decades ago to help with affordability. The result? It fueled a massive real estate bubble that devastated their economy for a generation. But that's fine. I'm sure it will work out perfectly for us. So, if we truly wanted to make homes cheaper, 15-year mortgages would be far more effective long-term. But more on that later. This affordability argument also ignores other costs of ownership, like taxes, maintenance, and insurance, making the real savings even smaller. It also glosses over the fact that longer loans often come with higher interest rates, which could erase the tiny monthly benefit entirely. The numbers make this look like a terrible idea, stacked on a worse idea, wrapped in a disaster. So why are we still talking about it? Most officials have tried to distance themselves from this plan, but two powerful forces might make it happen anyway. Massive profits for a select few, and the fact that we might be out of other options. It's time to see how you'll be left holding the bag for these mortgages, even if you never sign for one. I spend a huge amount of time researching and planning these videos. So, tools that help me move faster from concept to final cut make a real difference. That's why I partnered with Comet by Perplexity, a new browser built to act for you, not just search. Comet has background agents that work as your digital assistants, handling tasks like booking, scheduling, messaging, or compiling research, all from your browser. It's like a seamless assistant built into how you already browse. What I despise is being flooded with ads. Comet has a built-in ad blocker. No ads online. When you see a little blue halo, that's your Comet agent working for you in real time. I use it to organize notes and research for upcoming projects, and it makes the whole process feel less chaotic. Instead of managing a dozen tabs, Comet helps me stay focused and finish faster. It's built for professionals, students, and creators. You want to try it? Download the Comet browser for free using the link below. Alright, behind most terrible ideas is either a profit motive or sheer desperation. You don't need a tinfoil hat to see both at work here. The push for 50-year mortgages came from a meeting between the president and the head of the Federal Housing Finance Agency, or FHFA. This agency was created after the 2008 crisis to oversee Fannie Mae and Freddie Mac, the government-sponsored entities that buy mortgages from banks, provided they meet strict standards. Right now, you could technically ask your bank for a 50-year loan. As a private company, they could say yes. But these loans are almost unheard of for two big reasons. First, 50-year terms don't fit the current rules for Fannie or Freddie. If a bank makes that loan, it can't be sold off and must stay on their books for half a century. Compared to a 30-year loan, they can profit from instantly. This makes no business sense. However, if the FHFA told Fannie and Freddie to start accepting 50-year loans, that first barrier vanishes. The second reason is that 50-year terms fall outside what the Consumer Financial Protection Bureau calls a qualified mortgage. This QM status gives banks legal protection from lawsuits if the loan fails. Terms beyond 30 years don't qualify. Meaning, if you get a 50-year mortgage and run into trouble, you could theoretically sue the bank for predatory lending. They'd still have lawyers, so don't get any wild ideas. This might not matter soon, as there's a push to defund the CFPB, which would remove this last obstacle. And if banks can write these loans, the incentive is huge. Longer loans are more valuable when packaged into securities because they pay interest for an extra 20 years. They also allow for slightly larger loan amounts, maximizing bank profits. So why would the FHFA, created to prevent another crisis, push for riskier loans? We may never know. But on a completely unrelated note, the current FHFA director is an heir to one of America's largest real estate development firms. He also founded a private equity firm that invests in construction businesses like roofers and HVAC companies. Both his family business and his firm depend on a busy housing market for their profits. And that's a problem because home sales have crashed since interest rates rose. New buyers are priced out and current owners with low rates won't sell. If 50-year mortgages become normal, they will lock this rigidity into the market for an entire generation. But that's a problem for the future, and who cares about them? We have issues now. Even households with good rates are struggling. The true level of distress is hidden by a practice called extend and pretend, where lenders quietly let borrowers renegotiate terms without marking them as delinquent. They extend the loan and pretend it's fine. For lenders, some payment is better than none. But for the system, we have no reliable data on how bad things really are. For the housing industry, this is a crisis. One way to get things moving again is to make loan terms even more flexible. A 50-year mortgage is just a formal system-wide version of extend and pretend. This could be marketed as help for new buyers, but the biggest winners are existing investors. A major global issue is that homes are now assets first and places for people to live a distant second. They are the ultimate vessel for finance and tax perks. You can't get a government-backed 30-year loan to buy stocks. you can't claim the same deductions. To control home prices, you control how much people can borrow. A study in Sweden found homes became more affordable after regulators cracked down on interest-only loans. A global report found the same trend. If we truly wanted cheaper homes, 15-year mortgages would help far more than 50-year ones. But that's the point. One person's affordable home is an investor's market crash. On one side, 50-year loans make housing a better investment, driving prices up. On the other, they might keep a broken system from imploding for a little while longer. Recently, big investment firms have faced scrutiny for buying billions in residential real estate. Now, they're quietly trying to exit those bets. They want to sell their properties to the next wave of buyers. The only way that happens is if it's easier to qualify for huge loans. And the only way to sell that to the public is to frame it as help for the average family trying to buy one home to live in. This market is now so massive, it's effectively too big to fail. Making homes truly affordable too quickly would risk a system-wide collapse. So one group has to suffer. And it's always easier when that group isn't the one already holding all the debt and overvalued assets. Now, go watch this video to see if the everything bubble can keep expanding forever. And don't forget to like and subscribe to Winds of Thought to keep learning how the world really works.